channel. I'm Doris and I'm here to share with you about the market update. Investors expect the U.S. Federal Reserve to slow the pace of interest rate hikes. And also, BlackRock Vice Chairman said traders are betting that the rate cut is wrong and is the wrong one and will continue to raise rates this year. Investors are selling dollars as bets on the Fed will slow the pace of raising interest rates. Dollar spot index fell to its lowest level in nearly 9 months on Monday, as falling U.S. inflation expectations prompted funds to sell the ultimate safe haven asset. All of the world's major currencies rose against the U.S. dollar, with Australian dollar and the Chinese yuan rising to key levels. Just 2 weeks into the new year, it feels like a hot buy dollar trade of 2022 is now becoming the hottest macro short trade, said Patrick Bennett, strategist at Canadian Imperial Bank of Commerce in Hong Kong. The dollar's fate has reversed sharply in recent months, with the funds from Morgan Asset Management to Gold Sexman predicting that the Fed will soon control the pace of tightening. Traders now expect the federal funds rate to peak at 4.94%, down from the 5% forecast earlier this month. The spot dollar index fell as much as 0.4% on Monday, hitting its lowest level since April 2022. The dollar fell as data from the U.S. Commodity Futures Commission showed short yen positions held by leveraged funds fell to their lowest level since February 2021. They also reduced their short positions in Australian dollar to hold net long positions in the New Zealand dollar. A recovery in economic activity is boosting demand for risk-sensitive currencies, with the Australian dollar rising above 70 cents on Monday for the first time since August. The rupee rose more than 1%, the yuan rose 0.8%, and the offshore yuan rose to its strongest since July last year. The dollar is under pressure as market confidence grows in the Fed's imminent pause, says Rodrigo Castro, strategist at National Australia Bank in Sydney. As risk sentiment improves, he said, a stronger yuan is equally important to commodity-related currencies such as the Australian dollar. BlackRock Vice Chairman traders are betting that the rate cut is the wrong one and will continue to raise rates this year. BlackRock Vice Chairman Philip Hilbrand said the central bank would continue to raise rates this year to ensure that the inflation maintained a downward path, contrary to traders who expect policymakers to ease policy. Frankly, I don't see any possibility of easing this year. I think the market is wrong, former Swiss National Bank Governor Hilbrand said in an interview at the World Economic Forum in Davos. He also said that while he expects inflation to fall rapidly from multi-old highs, central banks around the world will continue to seek cut inflation to 2% and ensure that price expectations do not rise again. At best, we see some kind of pause, but not yet. Hilbrand said central banks should be honest with the question of how tightening will lead to a recession. In the old days, you could control inflation while otherwise being in good shape. Now getting inflation back under control means you have to destroy the real economy. It means you will cause a recession, and it is inevitable, he said. A return to price stability essentially requires a recession. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.